You have probably seen headlines or news reports like Morgan Stanley maintains buy on Nvidia. Target price $300 per share. But have you ever wondered who writes these reports? What do they actually do every day? In this video, we will break down what equity research analysts really do, what is inside their reports, the difference between sell side and buy side equity research roles, the skills you need for equity research, the pros and cons of this career, and of course, the compensation. So, stay till the end. And before we start, if you have not subscribed yet, make sure you do. Now, let's get into it. What is equity research? In simple words, equity research, as the name suggests, combines equities, meaning shares or stocks of companies, and research, which means studying them deeply. So, in simple terms, it's the process of analyzing listed companies to understand their business value and future prospects, and ultimately to decide whether their stock is a good investment or not. Now, depending on who you are working for, the purpose of that research changes slightly. If you are on the sell side, working at a brokerage or investment bank, your job is to produce research reports for your clients, which are typically large institutional investors like mutual funds. You analyze companies, forecast their performance, assign a valuation, and recommend whether investors should buy, hold, or sell the stock. These are typically the research reports you see publicly available on the internet. If you're on the buy side, working at a mutual fund, hedge fund, or portfolio management firm, your goal is to use that research plus do your own analysis to decide whether to actually invest money. So you are not writing reports for others, you are investing capital based on your conviction and research findings. In both cases, you are trying to answer questions like, is Nvidia undervalued or overvalued at this price? Should investors buy Unilever after its demerger? In short, equity research is about understanding a company's story through its number and using that insight to make a guided investment decisions. Now, let's look at how this world of equity research is structured, starting with the difference between sell side and the buy side. Sell side analysts work for brokerages and investment banks, firms like JP Morgan, Goldman Sachs, ICICI Securities, or Motilal Oswal. We already saw their job is to publish research, but what does that mean day to day? So, as an analyst, you usually cover one sector. It could be IT, banking, pharma, anything. You build and maintain detailed models on each company in your coverage. You will write reports and you'll talk to institutional clients like mutual funds, hedge funds. You will also act as a bridge between company management and investors. So, arranging calls, conferences, and meetings. So, basically, on the sell side, your output is research plus access to the company clients. Buy side analysts work inside funds, mutual funds, PMS, alternative investment funds, or hedge funds. Here, the examples could include like HDFC Mutual Fund, Kotak PMS, or hedge funds. Here, the job is slightly different. You look at ideas across sectors, not just one sector. You read sell side reports and do your deep dive and then decide whether your fund should actually invest. So you will work closely with portfolio manager to size positions, manage risk and track performance. So in simple terms, sell side publishes research, buy side uses research to invest. Most people start their careers on the sell side. That's where you learn to build models and understand how markets react. After a few years, they transition to the buy side where they apply those same skills to make real investment calls. Now let's actually look at what these reports look like.
Let's look at a real example of an equity research report. So this is ICICI Securities initiating coverage report on DOMS Industries. It was published in March 2024. So initiating coverage report is published when an equity research firm, so here ICICI Securities, begins covering a company for the very first time. So the first ever report on any company by a firm is known as its initiating coverage report. So these reports are much longer and more comprehensive than their regular updates reports. And the first page is usually a snapshot, almost like a condensed one pager. It highlights key differentiating points, key financial summaries, and the recommendation. They're saying at a DCF target price of 1825, on FY26, earnings worked out at 48x. And then the report begins. Investment summary. So it highlights the key differentiating points of DOMS. You can see differentiated high quality products across price points, then pencils across price points. They are highlighting why they are different. And then starts business overview. Now they'll talk about the company. What is company all about? How it is earning money. So this is like segment wise revenue composition. They're talking about corporate structure. Then the competitive advantages, like what are the brands under them, sub brand strategy, distribution network versus peers. So it's kind of a detailed document highlighting their differentiating points, growth strategy, any further growth potential. And then they also cover industry overview. In fact, this is a great section if you want to understand any industry. Just pick few companies and try to find out initiating coverage report for those companies and go through their industry overview. You will learn a lot about that industry from those 2-3 reports. Then the financial overview, historicals, projections, FCF generation. So with charts, they will show everything, key financials, and then they will end with their valuation and key risk and recommendation. So that's what an initiating coverage reports look like: detailed, structured, and data dense. Once a company is under coverage, so Analyst publish earnings updates every quarter. So this is the earning update. This was initiating coverage report. This is earnings update which they publish every quarter. So this was Q1 FY25. So you can see this report is much shorter. This is just 8 page. It highlights quarter's performance, major development in quarter, if there is any product launch or acquisition or any strategy updates, or whether the company is tracking the guidance that they had provided in the previous quarter. Based on that, Analyst update their valuation. This is the section where they say that if there is any change in their valuation. For example, in this case, you can see we maintain buy on DOMS with a DCF based revised target price of INR 2650. So earlier it was 2280. Now they are saying it's 2650. So that's a valuation update. And this is what earning reports look like. It's a 8 pager. In fact, there are earning reports with just 2-page update as well. So in short, initiating coverage builds the full story and earnings updates keep it current, like it's quarter by quarter. And together, these two formats form the backbone of equity research.
Normal day starts early around 7 a.m. As an analyst, you will be reviewing global news. You will be preparing insights before markets open. And during the day, you will be updating your model, writing reports. You will be tracking sector news. But during earnings season, when companies release results, things get bit intense. It will be long hours and bit of a pressure, but these periods are predictable. You know exactly when your companies are going to release their quarterly report, so you can plan things accordingly. If you are serious about this career, these skills are non-negotiable. First one, accounting and financial analysis. Second, financial modeling, model projection, revenue projection, margins evaluation. Third, valuation, DCF, precedent transactions, comparables. Fourth, industry understanding, how your sector actually makes money. Fifth, writing and communication skill. Sixth one, detail orientation, so that you can spot the trends that others are going to miss. And if you come from engineering, energy, or healthcare background, that's an advantage. Firms often prefer domain specialists who can be trained in finance rather than finance grads with no industry contacts. So it can be a starting point for those who want to switch from engineering background or any other background to finance. Now let's see compensation. So compensation depends heavily on firm size. For a sell side analyst role, smaller Indian brokerage firms offer like 15 to 20 lakhs. Larger Indian firms like Kotak, Motilal Oswal, they offer somewhere around 25 to 30 lakhs. Global IBs like JP Morgan, Morgan Stanley, they offer somewhere around 30 to 45 lakhs. In USA, this number could be somewhere around 120 to 180k. Buy side role like mutual funds, PMS, they offer 25 to 45 lakh base plus the bonus which will be linked to your performance of fund, and in USA it will be somewhere around 150 to 200k, and again the bonus component is separate here for a buy side role. So all in all, buy side offers higher compensation compared to sell side role. What are the pros and cons of being an equity research analyst? So pros can be you become a true sector expert. You will know your company's inside out. You will work across analysis, writing, company strategy, not just one function. You get to interact with top management and major institutional investors on day-to-day basis. Builds an excellent foundation for getting into buy side, corporate strategy, or portfolio roles. Work life balance is generally manageable except during earning seasons. For professionals from engineering, tech, or pharma background, it's one of the easiest bridges into finance. Cons: earning season can get intense with long hours and tight deadlines. It's highly data heavy, endless model, going through filings and Excel work. Teams are lean, so even senior analysts often have to get hands on with models. Since you usually cover one sector, the work can start to feel repetitive over time. But if you genuinely enjoy understanding businesses and markets, this remains one of the most intellectually rewarding careers in finance. So that's equity research. We have covered what the job really involves, what those reports look like, the skills you need, and how the pay works on both sell side and buy side, and why it could be great entry point to get into finance. If you found this helpful, check out my video on what investment bankers actually do. And if you are preparing for finance interviews, don't miss my finance interview playlist. It will help you structure and answer your technical questions confidently. And of course, don't forget to like, subscribe, and share if you found this useful. I'll see you in the next one. Thank you.